What's up, creatives? Welcome to the Tiffy Show. Today I'm going to be talking about what market capitalization means in stocks. If you haven't, make sure that you turn on notifications so that you know when I post a video. I like to post about lifestyle, dating, travel, investing, and everything in between. So if that's your jam, hit that subscribe button and let's get to it. Quick disclaimer, I am not a financial advisor. These are just my thoughts and opinions, so take them with a grain of salt. So what is market capitalization in stocks, or market cap? Well, market cap tells you how many shares outstanding a stock has and the price that people are willing to pay for them. So it's a way to kind of give value to a stock. Now, this is really important because it is broken up into three main categories. Those are large cap stocks, mid cap stocks, and small cap stocks. And this will help you determine how you want to diversify your portfolio for the long term and how much risk you're willing to take in picking stocks. To find the market cap of a stock, we're going to make it really simple here. You're just going to simply go to the profile, whether it's on Webull, Robinhood, whatever brokerage site that you use, Yahoo Finance, and you're going to look at the stock and you're going to see market capitalization and you're going to see the number and you're going to know whether it is a large, mid, or small cap company. Now, let's break down what all of that means. Large cap companies have $10 billion to $500 billion in market cap. Now, these are some of the largest companies in the stock market, and they're very recognizable brands and companies, and you'll know their names instantly when you hear them. Now, because these are the biggest companies within the stock market, they are safer, and so you might not get those huge gains at first, but you will have growth over time if you're a long-term investor. They're safe, and the cool thing is that a lot of these companies also pay dividends. Now, another really important thing to note about large cap companies is that no matter how the market is really going, whether it's going up or down or going crazy, they can always tend to stay pretty stable because they're recognizable companies. They know what they're doing. They've been in the game a long time, and they just don't shift that easily to whatever's happening in the market. So they're great to include in your portfolio if you want more, safe choices and possible dividend payouts too, which dividends are just when companies pay you and kind of give you a cut of the revenue that they've made. So they're kind of rewarding you for investing in their company. A few examples of large cap companies are Microsoft, Apple, Amazon, you know the names. They're huge, and that's what makes them a large cap company. Mid cap companies have $2 billion to $10 billion in market cap, and these companies are obviously a bit smaller than large cap companies, but in the middle, so they're bigger than small cap companies. And you will recognize most of these names too because they're on the cusp of becoming a large cap company, which makes them great for investors because they've showed their potential to be a good company, but they just haven't hit that large cap yet. So a lot of investors like to invest in these companies now because they hope for that growth potential of them hitting large cap status. Now, sometimes these companies stay in mid cap level because, they are competing against those large cap companies, and that's very, very difficult, or they're super niche. But either way, a mid cap company is a bit more volatile than a large cap company because of this, which means that, if the market is going up or down, it can affect a mid-cap company, which makes it more volatile and just means that, it's a little bit more risky for your money. But as we know, with investing, the more risky, the more returns if it's doing well. Some examples of mid-cap companies are Etsy, Livongo, and Peloton. And those are kind of ideas that you can see that those are growing and they make a lot of money, but they're just not, household names yet. Small cap companies are $300 million to $2 billion in market cap, and these are smaller companies. These are the risky ones because they are new to the game, but they have a little bit potential. Investors see where they're going or where they can possibly go. These are the gems, and these are where investors hope to make those huge gains. Because these companies are so small, sometimes they don't live up to the potential or the hype that they have. Now, with these companies, if they do live up to the potential or the hype, then you have the next Apple or you have the next Amazon and you are rolling in the dough. But remember that these have the most risk. These are the most volatile. One little thing in the industry, one little piece of news, one thing in the market, and it could blow this whole little company out of the water and it just be like done. So that is something to remember with these. But If you pay attention to things that I've taught you in the past in regards to, making your mutual fund, how I pick stocks, then you can look at these small cap companies and you can see the potential for growth in the long term. You can see a good company. So don't be scared of small cap companies. Just make sure that when you're analyzing a small cap company, that you are really looking at their chart, that you are really seeing the fundamentals of their company and what they're doing, so that you can have the best case in finding one that works for you and makes you money. Some examples of small cap companies are Exos Financial, Fastly, and Neo. You might not recognize these names because they are small cap companies, but again, these are small cap companies that might have potential to go really, really big. So you never know. Just make sure you look at the chart. How do you use this information in your stock portfolio? I wanted to break this down because I don't think a lot of people know the differences between all of these types of companies, but this is how you break it down in your portfolio. Know yourself. If you are a person that does not like a lot of risk, then you want to look at a portfolio that is heavy with large cap companies and a few, maybe 1 to 2 mid cap companies. Now, if you know yourself and you're like, I like risk, I like the potential to make lots of money, I don't care, like I might lose some money, cool, that's you, then you're going to want to look at a portfolio that is full of small cap companies with a few mid cap to large cap companies. I would say half small cap companies, some mid cap companies, and then 1 or 2 large cap companies if you're more into lots of risk but a lot of potential for reward. And that is how you use this information when you are building your portfolio and making it as diversified as possible. Every time I say diversified, just take a shot, because I say it so many times, but it's such an important thing when you're building your portfolio. Once you find that combination of large cap, mid cap, or small cap companies that works for you, the rest is an investment. If you enjoyed this video, make sure that you share, like, subscribe, and comment below, and let me know your investment strategy when it comes to, large cap, small cap, mid cap companies, and I will see you next time. Stay creative. I did it. Done. I did it!